Welcome to ForexTV.com's PM Exchange. It's Thursday, February 14th. I'm Remy Hokie. Today I'm joined by Joseph Trevisani, Chief Market Analyst at FX Solutions. Good afternoon, Joseph.
Hi, Remy. How are you?
Good to have you on the show today.
Thank you.
So let's start out with a look at the U.S. dollar today. Earlier in the session, we saw the dollar gain on the heels of the U.S. trade deficit data, as well as the decline in jobless claims in the latest week. But following Bernanke and also Paulson's testimony before the Senate Banking Committee, we saw equities pull off and also dollar-yen decline. So going forward, ahead of the three-day holiday weekend here in the U.S., if you could briefly tell us about the key drivers for the U.S. dollar.
Well, there were probably two things today. I mean, you know, the American statistics are not justifying either side of the equation. They're not justifying a rapid decline or even a building a slowdown, then they're not justifying a recovery. So you get a bounce, especially from the figures today, which are better than expected, but it never sustains itself because it doesn't really prove the case. Mr. Bernanke, Mr. Cox, I think, from the SEC, and Hank Paulson all looked pretty grim today. There weren't many smiles there. And more than anything they said, perhaps it was their demeanor that gave the market some jitters. I mean, you would think, I think it was expected that you'd get a stronger buildup for the American economy running into quarters 3 and 4, and you didn't really get that. In addition, you had Mr. Trichet out there today saying for the ECB, along with Alex Weber, that more or less what they said was, well, whatever we said last Thursday, we didn't really mean it. And they said that, interestingly, that inflation is a monetary phenomenon, quoting Milton Friedman. I almost said Milton Berle, but Milton Friedman. And these are not the things that a banker who is contemplating cutting rates would say. So that also bolstered the euro.
Okay, while we're talking about the euro and also commentary out from the ECB, let's take a look ahead at the upcoming central bank meetings. February is a short month, so in the beginning of March we have both the BOE, ECB, and also the FOMC. So at this point in time, if you could briefly tell us about your expectations for the rate outlook for the ECB as well as the BOE.
Sure. Yeah, I think we're probably going to see more of the same. The Fed, I think, will cut. I think they may cut a quarter. I'd say it's 50-50 between a quarter and a half, but I think they will. The BOE, it's a little, I actually think they're not going to cut this time. The ECB is definitely not going to cut. I would be very surprised if they did anything. I mean, they did modify certainly their supposed bias at the last week, but then again, they're out there taking it back this week. None of that tells me that they're getting ready to cut. And in addition, none of the statistics from the ECB, from the EMU, really support the case so far for a slowdown of enough magnitude to prompt them to cut rates.
So, Joseph, how does this translate into your forecast for the euro as well as the sterling against the U.S. currency?
It's a very apt question on your part. I still think that there are two ways of putting it. I mean, you can look for a movement on either side, on the euro side or the dollar side. There seems to be less chance, at least less visible chance, that you will get a decline in the euro economy, Euroland economy, to sub 1%. That does not seem to be in the cards right now, at least from the statistics we're looking at. However, the other side of that, of course, is if the American economy does recover substantially or does not decline as much as has been predicted, you will still get the same type of movement up in the dollar and down in the euro, and that's still what I expect.
Okay, let's shift our focus right now over to the dollar block currencies as well as their respective economies. Overnight in Australia, we got strong employment data out, and as a result, we saw the Aussie strengthen against the U.S. dollar. But that rally has stalled in Aussie against the U.S. currency. But going forward, what's your forecast for the Aussie against the U.S. currency and the yen?
You know, I think that we have a case of what is a severe case of what is the RBA going to do here. They're very much out of step with the rest of the world. Even the ECB, despite its oft-mentioned interest and fears for inflation, has more or less joined what's going on in the rest of the world. The RBA has not. For that reason, even though they had very strong employment numbers, which are something that they don't actually fear but concerns them as far as inflation goes, I don't think they're going to continue their rate hikes this time around. And that, I think, will also put weight on the euro crosses. I mean, on the yen crosses, particularly the Aussie yen.
Okay, I'm looking ahead to the data front in the upcoming week. As I mentioned before, Monday is a holiday here in the U.S. But for the other regions, as well as the U.S., what do you think FX traders should be watching out for in terms of data and event risk?
Event risk on Monday is going to be, I believe, still you're going to have stops in the euro on the downside and also in the euro crosses. The movement, if we look at what's been going on since November, you have an extended but a very steady range in the euro, and that not so much in the euro crosses, which have been going very violently up and down. But I still feel that the risk on those currencies remains on the downside. If there is anything that's going to change, I think in the next few months, it'll be the outlook for the U.S. economy. The European economy has not had a great deal, it has no stimulation coming from the ECB. The only thing that would keep it, would help it grow would be greater growth in the United States. So you have to look to the United States for the movement. So that's what I think they should look out for. The downside in the euro, but then you've heard this from me before.
Okay, and last but not least, before we wrap it up for today's interview, at this moment in time, what currency pairs do you think are the best trades?
That's a good one. The best trades. I would probably go short the euro sterling if you had to pin me down on something. Okay. And you did, so that's what I said. There you go. Short the euro sterling.
Okay, Joseph, as always, thank you very much for coming on the show.
My pleasure, Remy.
This has been your Forex News with Joseph Trevisani from FX Solutions. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks pulled back in today's session with the major indexes down over 1%. Equities fell into the red on this Valentine's Day after gaining for the past 3 sessions. Today's decline came on the heels of Bernanke's bearish comments on the U.S. economic outlook. In today's U.S. data releases, the Commerce Department said that the trade deficit fell in December and for the year of 2007. The deficit was down 6.9% to $58.8 billion from the unrevised $63.1 billion in November. Meanwhile, the Labor Department said initial jobless claims fell for a second week in a row, down 9,000 to 348,000. But the 4-week average is at its highest since October of 2005. At the closing bell, the Dow Jones Industrial Average fell 175.26 points, ending at 12,376.98. The tech-heavy Nasdaq fell 41.39, ending at 2,332.54. And the S&P 500 lost 18.35 points, closing at 1,348.86. In the fixed income market, long-term treasuries fell for the 3rd consecutive day. The benchmark 10-year treasury note was down with its yield up at 3.82% from 3.73% late Wednesday. The 30-year long bond fell with its yield up at 4.65% from 4.55% in the previous session. And the 2-year note was unchanged with its yield at 1.91%. In energy, NYMEX crude oil futures climbed today, closing above $95 a barrel. Prices shot up as the market priced in upcoming Fed rate cuts and also rallied on today's U.S. trade deficit data. March crude gained $2.19, ending at $95.46 a barrel on the NYMEX. In refined products, March heating oil futures added 5.1 cents to end at $2.66 a gallon. March gasoline futures rose 8.62 cents, closing at $2.4761 a gallon. Meanwhile, March nat gas futures soared 38.4 cents, closing up at $8.772 per million BTU. Earlier today, the EIA reported that nat gas supplies fell 120 BCF in the latest week. Over in the metals complex, gold futures closed out the session with a small gain. Platinum futures continued its climb into record territory. April gold rose 60 cents, closing at $910.80 an ounce on the COMEX division of the NYMEX. In other metals, March silver fell 9.8 cents, ending at $17.255 an ounce. March copper was down 4.25 cents, ending at $3.4880 a pound. This afternoon, we're joined by Tom Puckett, commodity broker at KS Futures. He'll recap today's session in energy and metals and also give us his short-term outlook.
Good afternoon, Remy. The markets this week have been posting some interesting trade, both in the agricultural sector as well as in the energy sector as metals. We've had the gold trading today in the 904 to 911 in front-month February futures contract. We've been above 900 for a while, and we've been a bit higher than this. In fact, we've kind of come off from previous highs at around 915, 916 in that range, and a little higher. The main thing is that gold looks like it's gaining some strength again. A lot of international stuff going on. There was a warning of terrorist possible attacks and retaliation in the Middle East about the car bomb that got one of the leaders over there of Hezbollah. The Venezuelan president down there, or dictator, some call him, has said that they're thinking about cutting off oil and supplies to the United States. And of course, he's making all the noise he can. And so that's made gold appear to need to strengthen up and hold. There's talk about a higher move, but we haven't seen it yet. Right now, the last bid shown was 908.50, up about $2 from previous close. So gold is still holding out, while silver has dropped off about 4 cents to 5 cents today. So we may be fatiguing some of the headlines that have perhaps had influence in the market. Another thing that's of interest is the dollar and euro combination trade. We've had the euro trading today in the 146 range, 146.5, 145.5, with the dollar down also. The euro up, the dollar down at about 76.25. The gold looks like it's going to stay an interesting market to hold. I don't see a huge move right now, anything coming. And anything right now is really a guesstimate, I think, both in the metals, silver, as well as in the gold. Crude oil did bump up today a couple of dollars. 95.59 is the March high for the March contract in the futures. We've been up in this range before. We had a lower inventory than was expected, so that's had some of the influence on it. Natural gas is also up about 35 cents or so in the front months, 30 cents in some of the other months. We had a lower figure on that by some 120 billion cubic feet. So energies are looking very strong. How to compare through with the consumer pricing and gasoline and the cracked distillates and all that sort of thing is yet to be seen. And how long it lasts is another question. Natural gas, of course, we're in season. We've had some cold weather, so we've had some usage there for sure. And that's seasonal. That's somewhat to be expected. Natural gas in the 875, 876 range. Looking it over at the whole thing, at the oil complex, the energy complex, as well as the metals, they're both bullish on the view. They both look like they could go higher. At the same time, there'll be a fatigue point to come in at some place. We've been in these ranges before. If they break out to the top, then we could see new highs across the board in all these different contract groups. At the same time, if we do not break out, then we might see some people decide to take their winnings or their profits if they have any, and they may go on the short side. So Friday, tomorrow, will be an interesting day to watch to see if we hold the crude oil prices as well as the natural gas, which probably be, though it's a separate market, probably be in much the same range. May not be up as much, but they'll probably hold. Gold, I think it's going to hold around $900, a little above, maybe push higher. Might see some profit taking come in too. So that's a quick thumbnail on the thing. Let's take a look and see what happens as we finish the week tomorrow. Thank you, Remy.
That was Tom Puckett, commodity broker at KS Futures, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hoagie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.